Portfolio Builder members, welcome to our Tuesday Trade Alert. Let's see who we have live right now. Good morning, Dean. If you're live and listening, go ahead and post in there and say hello. I can answer any questions on the current Trade Alert as well for members. And we'll get this started in a short second here. All right, let's get this show on the road. Start off with a quick little review of who we are and what we do for our members, and we'll jump into today's trade recommendation, which is on United States Oil, the USO ETF. Now, to be clear, we're not recommending just a simple buy and hold. Our program's focused on generating retirement income, so we need puts below and call options above. It takes a super risky asset like an ETF like USO and turns it into a much more stable product that we can use to generate income. Now, we do have a small buy and hold portfolio that's been killing it on gold, which we'll look at, and also on Bitcoin and Ethereum, a tiny position in that. But for the most part, most of our members are focused on trying to generate safe, consistent income. And this is a text message I got yesterday from a client, and so he was up $8,500. This is my favorite trade of the year. We called the top on the TLT after playing it all year to the upside, and we've been catching a huge win betting down on TLT. Tomorrow's the big Fed day. We've got a lot of important stuff to cover in our update. Real quick, let's switch over to our quick review of who we are, how our program works, and then we'll jump into the last trade we gave out and what our new trade is. Okay, so we have a high success rate. I put 99%. That's not an exact measurement, but it is our refund rate. So 1% of our clients have ever refunded. That's because we give away the trades for free and only take orders from people who realize we are the real deal. The other big difference in our program and other programs is that people actually get the same result as the advisory. Whether it's a win or loss, our folks are able to follow the trades because they come out at a predictable time and are very easy to keep sorted out in terms of which assets to own and how to follow the program. Most other products out there, which is really the stumbling block we have for a lot of clients coming into our program, is they've been burnt so many times by other products out there because of a number of reasons that they're skeptical that a trade alert advisory could really help them with their financial future. So our product is extremely easy, on-the-go daily retirement income trade alerts delivered at noon Eastern, Monday through Friday. Dean says it takes 30 seconds a day, but who's counting? My dad says it takes less time to take out the trash. And I ask you, why does trading have to be so complex? Don't you have better things to do with your time? Our promise is to protect your assets and show you how to pick up the low-hanging fruit to generate consistent retirement income. And our put options that hang below the SPY and TLT, the two core positions that make up around 90% of our total portfolio, always have downside protection. So there's never a period of huge losses because you own the put option at all times. So if you look at your portfolio today, ask yourself, are you protected against a crash in stocks or bonds? And if not, why not? When you follow our program, you'll have complete coverage at all times. So again, we're targeting income and safety, not growth or speculation. And because of that, it dramatically changes the way we look at the markets and how we trade markets. Our target return on investment is only 1 to 2% a month. And we've only had one losing month of -1% in July and have averaged a consistent 2% return per month. And if you watch this daily YouTube video, you'll know exactly the rhyme and reason of every single trade alert. Plus, you can chat with me live and get even more information. So if you're listening out there, Oscar says, good afternoon, Dean, Jason, and the rest of the folks. Well, welcome, and Ernest is in. And Tom, welcome, guys. Thanks for posting in the chat. We love getting that interaction. And I'll dive into today's trade alert in a moment, or at least why we don't give away the exact trade on the live stream because it is a free live stream. So I can answer any specific questions in the chat for those of you who are members, and all three of those folks are members. And once again, thanks so much for showing up on the live stream. We really appreciate the interaction. Okay, to review the different allocations we recommend, let's just review the three setups. So we have the light setup. You would trade Monday, Wednesday, Friday at noon Eastern, the SPY ETF. You would need 100 shares of the SPY. Buy-in on that's around 30K. And then you'd have 200 shares of the TLT. Now that's the 20 plus year treasuries. And again, we're not actually trying to make money from the interest rates on the bonds. We're playing the change of interest rates, which is very easy to do with the TLT because it's at the long end of the bond market. Beyond that, we do recommend a buy and hold 10% allocation in GDX. Now, that's not GLD, spot gold, which I think may be stuck in a... this is the best service I've ever subscribed to. The gains are small but really consistent along with downside protection. Well, thanks, Tom. I appreciate that. So again, this is our light allocation. If you wanted to multiply it, you would just double all the figures and you'd have the right risk to reward ratio of stocks to bonds plus the inflation hedge with gold. Now we like GDX, not GLD. I think GLD may have hit a ceiling because central banks are buying up gold at that $1,500 level as fast as they can, and they can easily put a ceiling on the price of gold. What they are not doing is buying up shares of mining companies who actually can produce new gold. So that's where I believe the better return will be found. Now, if you want to start off extra light, 100 shares of Facebook. Now, this trade did get switched out. I haven't updated my slide. We've switched that out to USO. And so I'll do the math for you. It's almost... about 10 times as many shares on this. Dave Magavero says, good morning. Welcome, Dave. Thank you for posting in the chat. Really appreciate that. How are you doing today? So we'll look at the new allocation that we switched out today from Facebook. I still love Facebook, but because of the events over the weekend, the stars have really aligned for USO. So we will... take a look at that. This is our light program. You give up the SPY security, which is a diversified ETF with 504 companies in it, and now you're going to have either a single ETF that's much more concentrated or a single stock, and our goal is to actually get a bigger return with more risk. So for those of you who do want a little more excitement in your life, that's what your Tuesday play can offer. Now, you would still have your buy and hold portfolio of approximately 115 shares of GDX, and you still need your TLT position. What's critical about our whole strategy is having a relatively equal ratio of stocks to bonds. When you overlap those two, it makes it very hard to have a losing period. Now, for a lot of our members, they like to do the trades 5 days a week, and here is the breakdown of this as of last week. Now, I will update this considering we've rotated into USO for our Tuesday play, but you can see how you could break up a $100,000 investment into this very diversified portfolio. Now, what's neat is we only have to worry about 4 total securities. So your entire portfolio is extremely diversified. The SPY is 504 companies, and if you've been following the whole value momentum exchange in terms of where companies or banks are rotating their capital, well, the SPY ETF is automatically doing that for you. That's why it's staying flat while the momentum stocks are pulling back a little bit. The bottom part of the SPY is loading up. So the SPY is doing its job beautifully, and I am looking for a really nice run on the SPY coming up for our members. We'll talk about that with the Fed meeting tomorrow. And then the TLT is the tax receipts related to 350 million of the highest paid citizens in the world with an average salary of about $65,000 a year. So you can't get more diversified in terms of U.S. products simply by just owning the SPY and the TLT. Now, if you did get the email today, but it did not have the trade alert in terms of the options that we're putting on, that means your free trial has expired. So call Dean, 505-322-7515. Let's get you started as soon as possible. Dean's a great trader. He follows our program. He does some of his own trades. He can talk the markets with you, evaluate what's going on in your portfolio, give you his personal opinion on what's the worst positions you have, and help you get things sorted out so you can follow our program very easily. Another quick reminder, we have our paid membership Zoom webinar where we can actually talk to each other on Wednesday, and we have our free webinar on Thursday. And if you have not yet, hit the subscribe button, then click the bell so that you can automatically get the link sent to you for our daily live stream. I would also recommend downloading the YouTube app so that you can get it on the go from your phone as well. All right, let's take a quick look at the most recent trade. Facebook was having a nice little profit for us as of Friday. Then we had a little bit of a setback on the SPY with the attack on Aramco in Saudi Arabia, which we'll dive into. We lost 69 cents on Facebook week over week, and we made 6 cents on the option caller for a net loss of 63 cents a share, or $567 from 900 shares of Facebook. This portfolio is still really doing extremely well, not a big deal. And I would have held this position in Facebook, but I think the opportunity on USO is extremely advantageous to us because of the options market. So you can see this Tuesday play is still up 18%. Total and 23% this year. Our SPY trade is up 10.8% total, and our precious metals portfolio is now up 53%. The bond portfolio has been a heck of a ride. It's actually going to be showing a bigger profit than you see right there at 13.7 because it does not calculate the value of our put options, which are delivering the big profits for us in that portfolio this week, and why I was showing this testimonial right here, $8,500 on 25 contracts on the TLT. So we're not going to realize that profit in this screenshot until Thursday when we close out that position. So that's a review of those portfolios. Today we're focusing on the alerts for Tuesday. So if we look at the Tuesday return, again, it does have more risk as it aims for a higher profit. So we're looking at the return month over month for just the equity portfolio that's delivered on Tuesday. And it's been pretty smooth sailing. December had a 4% loss, May and July negative 1.3. Other than that, it's been bouncing around from the 1 to 7% return range, January and June being our biggest gainers, February and March up there. And now the market's been slowing down as it gets back towards those all-time highs. Now, I do think we have a big breakout in equities ahead, so we'll take a look at that. Now, if we do take a look at today's trade, I can't reveal the full trade, but I will talk all about it and why we are positioning in it. Now, again, the trade setup I gave investors today, your maximum loss on USO will be 4%. And your maximum gain will be 8%. And that is achieved by purchasing a put option below USO and selling a call option above. And so this makes it a much safer trade. And again, if we can hit a few of these 8% returns over the next several months of playing this trend we're going to point out, this could be a very, very lucrative period of time for that Tuesday play. Now, to put things into perspective of total allocation, again, here's a summary of each portfolio before I jump into today's trade. So in our model portfolio, we have about a 4-to-1 ratio of capital held in the SPY versus the Tuesday trade. Now, if you're only doing the Tuesday trade, that's fine. Just realize it's going to have greater volatility than if you followed our exact portfolio. So for some people, that's exactly what they want, and they want to go for a much higher return, and they're okay with a little more volatility. If you're the sort of investor who really does not like risk, you hate losses, your SPY trade is by far much safer. Now, I do want to point out, when you do overlap all the strategies, the profit loss is extremely attractive, and that's where you can see we've only had one losing month in July, negative 1%. Other than that, it's been bouncing healthily above 1%, sometimes in the 2% range. Okay, so let's take a look at the current news. Okay, so the big picture is that the world's largest company, Aramco, was attacked supposedly by Iran, probably by Iran, and now we have the U.S. getting ready to retaliate. Now you might wonder, what's the relationship between Saudi Arabia and America? And the story goes back quite some time to 1960s. Nixon got us off the gold standard, but we still needed to try to push the entire world to be reliant on the dollar. And so our monetary policy perhaps has done the job to a degree. But another big way they've done that is they have a deal with Saudi Arabia to only sell oil in dollar-denominated prices. So this forces the entire world to have a supply of dollars. And so this has been very beneficial to America. About 15 years ago, some Texans figured out fracking, and now our reliance on Saudi Arabia has become a lot less, and it has a lot to do with our current trade alert on USO. So in general, we have a shock of supply in Saudi Arabia. We have their Aramco, which is what got attacked, trying to go public. So they really would benefit. There's a lot of reasons Saudi Arabia would benefit from higher oil prices. And at the same time, Iran is being sanctioned dramatically as they try to develop nuclear weapons. And so I believe these tensions between Saudi Arabia and Iran are going to intensify in the next few months and potentially cause even further spikes in oil prices. Now, meanwhile, once again, our whole philosophy in trading during this period of global rout has been to invest in products that are based in the United States. So United States oil companies are very protected in a period of time where the main supply of oil is clearly having a struggle. Now, we did get a nice sell-off this morning, which I was thankful for, because Aramco says, oh, we'll have it up and running in no time. And so we had a nice sell-off, which gave us a great buying opportunity on USO today. But I believe we're just at the beginning of the escalation. In fact, this is not the beginning. We've seen the Iranians, making small attacks on different parts of the oil supply chain for the last several months. So this is the next step in escalation. And we'll see exactly. We got Pompeo flying over there right now, and apparently they have figured out exactly where the attack was launched. And regardless, with all of the stars aligning, this looks like a very nice play for our Tuesday trade, where we're aiming to take advantage of the option market, where we have a huge amount of speculation in the call options, and then simply buy the asset and protect to the downside with the put. So even if we're wrong, our maximum loss is very controlled because of the way we play the options. So let's take a look at some of the information coming in this morning. News: the U.S. has identified exact locations in Iran. 20 drones and cruise missiles launched against the Saudi oil facilities. Also, apparently Saudi Arabia, which has been extremely rich, has finally started having some deficits, which is why they're trying to do an IPO and raise a considerable amount of money. They want oil in the $80 range, whereas now the U.S. frackers are doing very well in the $60 range. So there's a lot of conflict here, but at the end of the day, I think this is very bullish for U.S. oil for a considerable amount of time. Here's a look at how profitable this Aramco is. It represents some 80% of Saudi Arabia's entire GDP. It's insane. It's basically the country's only company. And you can see it has larger net income than Apple, just a little bit, but $4 billion larger than Apple, the largest income generating company in the world, stateside. Bigger than Samsung, bigger than Microsoft. You get the point. Now, if we compare it to other oil companies, it is massively bigger. Company is just going to sit back after getting attacked. I got news for you. Most likely not. If we do remember that journalist who was cut apart in a hotel, that's the Saudis. So they are not a nice group of fellows by any stretch. So I think we have some more surprises on the way to continue to escalate this situation and keep oil prices higher. And for us, we really just want the speculation to continue so we can do our safe trade and pull some income out of the ETF USO. Trump says U.S. military strike would be proportional to Iran striking the oil facility. We'll see. This was an interesting report on Zero Hedge. This is a fellow who was interviewed on Macro Voices, and I listened to it. And he was actually a few weeks ago telling people a good way to hedge your portfolio would be to buy out of the money call options on oil because of all the escalation that was slowly happening. It was a great interview, and I had thought about it quite a bit. Didn't take any action on it, unfortunately. And then just I think a week or two later, all of this happened. So again, in the description box, you have a link to this document if you do want to read the articles and screenshots in detail. In this chart, he's pointing out just some technical analysis on the value of oil and how it could quite easily go considerably higher, which I do think will be the case. So there's a lot of content here if you want to read it through in detail. Now, another article came out from JP Morgan about how high can the price of oil go before it would start to affect the stock market. And they're saying about that $85 range would be very inflationary and start to cause some issues with U.S. stocks, with profit margins, and of course now the central banks are going to have to deal with inflation and potentially raising their interest rates, which would be a terrible time to do that. If you follow JP Morgan's Marko Kolanovic, who's been very bullish on the stock market, he believes that this trend will continue. He says it's hard to be surprised by the recent geopolitical event given the string of escalating events involving oil tankers in the Strait of Hormuz, the Gulf of Oman, Gibraltar, downing of drones, and he believes that we will see a further trend with momentum rotating into energy. And so if this is correct, we get some lower interest rates tomorrow from the Fed, we get some more escalations in the Middle East. USO is sitting very pretty in this current situation. Now this is another big theme that hit yesterday and the day before, is that the overnight lending rate spiked. Now, yesterday it spiked to something like 4% and was getting a lot of attention from all the Fed watchers and interest rate experts. Last night it spiked to 10%. So there's a huge dollar shortage right now. And so this was a tweet that just came out just a few minutes ago that will the Fed not only drop rates by 25 basis points, will they have to drop that IOER rate. So we'll take a look at some of the content on that in a minute. Here's that momentum value correlation to crude, and that's the inverse of crude. Iran's supreme leader, there will be no talks with the U.S. at any level as they deny the attack. Here is a clip. I only brought this up just to point out there was a journalist who was doing some reporting on Aramco IPO and saying some nasty things about the leaders, and he ended up disassembled and found in a garden. And what did the world do about that? Absolutely nothing. And that's because these guys are key to keeping the dollar hegemony around the Middle East and with all the people buying oil, as well as a huge supplier of oil, obviously, and one of the most profitable businesses in the world, or the most profitable. Here's the overnight repo rate spiking. Apparently something like this happened in China in 2013 and led to some trouble. So I believe that there is a huge dollar shortage right now, potentially caused by this rapid sell-off in the treasuries we've been watching over the last 3 weeks. And now it's hard to find dollars, causing these overnight rates to get ridiculous. So I do suspect that the Fed will not disappoint tomorrow. Maybe they won't be going 50 basis point cut, but I think that they do need to inject some liquidity into the banking system, and as well at least a 25 basis point cut. So we'll see if that's the case. That will be very good for our SPY trade. Here's the tweet about China's banking system nearly collapsing when the overnight repo hit 25% in 2013. Now here's a full article about this, discussing the repo rates, and if you do want to read it in detail, it's all in the document for you. I'm just going to go over the highlights. Here's a look at the 10-year Treasury against the real Fed funds rate, and what we can see is just the long-term trend towards zero. And so I think that we will see another surge in the TLT before this is all over. Currently, we've been shorting the TLT, and I think we'll continue that trade Thursday, as I believe the SPY is going to travel much higher. We're going to see people continue to liquidate that bond position and rotate into stocks until we get the next escalation in the trade war. Here's the repo rate yesterday, only at 3.7, and this was getting a lot of fuss. Some more charts of that, but essentially there's just a huge dollar shortage going on right now, and it looks like the Fed really does need to inject more liquidity into the system to prevent some major problems in the banking system. A lot of negative yielding bonds went positive, so we're seeing this trend of rotating out of these bonds into stocks right now, which is why I think SPY is going to travel up considerably higher. And there's a chart just showing you that huge amount of negative yielding corporate bonds that dropped in literally just a few days, from 1.2 trillion down to just over $500 billion sitting in negative rates. In this, they go through a bunch of different options. It's pointing out how now there's more $100 bills in circulation than $1 bills. The money supply is dramatically increasing, and it goes over a lot of the different ways they can try to deal with this dollar shortage. At the end of the day, it's lower rates and some form of quantitative easing. And it goes over a lot of different ways that this can be accomplished. But from our point of view, currently it just means to be long the SPY and continue to be bearish on that TLT until we get to a point where we think the trade war will escalate. What to expect this time? In funding markets face stress in the next few months, which Bank of America expects will happen. The Fed could easily conduct repo operations to stem upward pressure. Since the recession, the New York Fed has periodically conducted small repo operations in order to test operational readiness. There have been 21 operations in total since 2012, which is somewhat bizarre considering there are well over $1 trillion in reserves floating around the financial system. The last set of Fed test repo operations conducted in May have been very small, around $23 million in size for USTs. And I think we missed the last piece of that article, but the end result is that Bank of America is predicting that the Fed not only needs to lower rates, but they're going to be forced, regardless of what happens with the U.S.-China trade war, to start putting more money into the banking system. So tomorrow could be a very exciting day, and we'll see how accurate Bank of America's analysts are. This is a crazy little thing happening in China. Remember, their 70th anniversary is on October 1st. Will there be any surprises leading up to that or during that period? The protests in Hong Kong continue. We've got a drone attack in Saudi Arabia. Taiwan's getting antsy. The Chinese are running out of food. Their pork prices are up 50%. And so there's a lot going on. Meanwhile, Andrew Yang, this guy's a character. Of course, we want to know who's going to win the election and how that might affect markets. So I do follow that a little bit in terms of watching the Democratic debates. He's been hyping up his $1,000 a month offer. And in fact, he said he would give away his contributions if you sign up for his email list. So I think he's now promised out something like 3 times more than he's collected. You have to admit, a Yang presidency would be a lot of fun. Okay, big news on the U.S.-China deputy-level trade talks to begin on Thursday. So what I'm looking for here is, will they finally buy some farming goods? And if so, what concessions will the U.S. make? If this happens, I think this could be extremely bullish for equities and continue to put pressure on the bond market as people jump ship from their negative yielding bonds while they still can take a profit, and then rush into U.S. equities and maybe into emerging market equities as well. So that's what we're watching. Now on the other note, if they do not buy farming goods, in the face of massive inflation and problems with the food supply, then that's very alarming. That tells me that China does want to try to pull the U.S. into a recession into the 2020 election, in which case we get that next round in the TLT. Now, it's hard to predict. It's very hard to predict. They've been telling us they'll buy farming goods for 2 years now. Have they finally suffered enough to the point where they would do that? And if so, with what concession from the U.S.? We'll see. The U.S. continues to say they're only going to do a real deal and not a bullshit deal. Trump came to our hometown yesterday. Just posted that up. He's out rallying already. Trump says he's not looking to get into new conflicts. Sometimes you have to. Would that help his... Every event that ever happens is always looked at in the light of how will this affect the next election. And so if we're at war with Iran and maybe with Russia behind their side, that could probably be a pretty good selling point for Trump going into the election. So I'm betting that there will be some retaliation against Iran in the very near future. And of course, China slams premature blaming for Aramco attacks as U.S. hawks argue for military action. Remember when Iran shot down a drone saying knowingly that it was in their airspace when in fact it was nowhere close? They stuck strongly to that story knowing that it was a very big lie. Now they say that they had nothing to do with the attack on Saudi Arabia. We'll see. Okay, quick look at our charts. I didn't do the actual charts, just the summary of the returns today since we have a lot of content. But our strategy has remained very stable here. We're long the SPY. I'm expecting a dovish Fed tomorrow and a rotation out of these negative yielding bonds into stocks as everybody waits to see if we can get some sort of trade deal with China. And if the trade deal does come, I think that danger zone I've been talking about on the SPY, the danger zone for the SPY is in that 310 to 330 range. I think that's where we can get to with the dovish Fed, with all the money rotating out of the bonds, and with just the hope of a trade deal and the assumption that the Chinese won't want to create drama during this anniversary. So with all of that combined, the setup looks very good for the SPY, and I think the reason we've seen it kind of trading flat right now is because of that momentum value rotation. Again, the SPY does that for us. That's what's so beautiful about the SPY ETF. It's automatically adjusting the allocation to all the stocks based on what the market's doing. So it's a beautiful product for that. TLT still hovering below that 140 level. And so we'll see how we play that on our Thursday trade. We've been short since the top and long all year, so we've had almost no losing trades on the TLT. Now, I'm not going to say we've had zero, but it's been almost 100% straight path up all year, so it's been easy to predict that and play that. And then calling the top was much more difficult. So we'll see. I'm worried at some point that the trade talks will break down like they have for the past 2 years. So I don't want to be bearish the TLT when that happens. So I do feel like we have a little more time to ride the SPY higher before we'll allow the TLT to show some volatility and protect us against downside risks on stocks. Here's a look at the European stocks I track. Nothing cratering, which is good. Deutsche Bank, we keep a lookout. Very leveraged bank in Germany that is perhaps the canary in the coal mine related to China. As a key trading partner to China is Germany. Can't really trust what the Chinese say is happening because they call it a state secret and they don't let anyone audit their books. So you just have to take whatever they present at face value. But what we can do is take more democratic societies who do business with China and look at their books and their trade to get a better feel. Now, of course, China's saying all their growth is now internal, so it's what can you really trust? The Chinese stocks hanging in there. Their Shanghai index was down 1.7 yesterday, which was a little bit alarming. And we are seeing a pickup in that exchange rate. So this has been the best leading indicator for predicting volatility before it happens is when the yuan starts to devalue. So my expectation is if a trade deal is not reached, this conversion rate is going to push much higher towards somewhere in the 8 to 10 range. And so that can create some major financial chaos because it forces all of China's trading partners to follow suit and devalue their currencies, which will continue to push that dollar stronger. So that's why we look at this currently. Now there's a 1 year look, so we can see it hit 7.2, pulled back. We've been in a period of ease, a trade truce, with hopes that something's going to happen. Another thing is that supposedly the Chinese were buying future contracts to short the dollar and potentially lost a lot of money. So they may very well be realizing that they are running out of dollars, which they need to buy all of their imports. And so maybe they really are ready to try to make a deal. So hard to say. They've been saying they would for 2 years and then just saying just kidding. So hard to believe them at this point. Nice sell-off today for us to enter into the USO position after, I believe, a record spike in prices Sunday from the futures market. So we can see it spiked up to nearly 70, down to 65 today on that article that they will have everything up and running super quickly, but the drama is just now beginning to unfold. We're literally on day 3 of this escalation that could turn into a much bigger deal. German bond I like to watch to try to help predict the treasury market for the U.S. It's been a great leading indicator, and you can see how correlated those are. Meanwhile, another good indicator of geopolitical risk is these rebel cryptocurrencies, the rebel money. Bitcoin and Ethereum are the two I like currently. And in our portfolio, instead of having just 10% in GDX, in gold, we actually have 8% in GDX, 1% in Bitcoin, and 1% in Ethereum. And those are doing well today as well. Okay, let's see what kind of questions we have out there, guys. If you have a question, use that chat box now, and we're happy to talk with you about all the trades and ideas that were presented in today's presentation. All right, guys. Well, it looks like we have a pretty quiet crowd today. Thank you for talking with us today, Dave, Ernest, Tom, and Oscar. And we got our paid membership webinar tomorrow and our free webinar coming up Thursday. If you want to make sure you don't miss any trades, call Dean 505-322-7515, and let's get you started as soon as possible. Ernest says, why would my broker have a 2,500 share limit? What broker are you using, Ernest? And is that like per purchase, or is that, can you do multiple purchases, or is that just going to be their total limit on that? And that's a good point. Let me show you guys how that looks in our portfolio. So we went from having 900 shares of Facebook to 13,000 shares of USO, which means we have 130 contracts straddling that USO with the call above and the put below. Tasty works, okay. Yeah, per purchase, okay, well. Tasty Trade is like, it's their like beginner level Thinkorswim platform for Ameritrade. So maybe they just did that so people don't accidentally type in too many zeros or something. But yeah, I think just today it's traded 61 million shares. So it's a very liquid ETF. And so you should be able to get filled on that quite easily. So there's the big picture of USO, and hard to believe it may have had some splits or something to get from 115 down to 12. But there's tremendous trading volume since 2017 that's been piling into this one. Oscar says, Jason, no one is dead on, but you're close. Thank you for sharing your knowledge. Very impressive. Oh, thank you, Oscar. Really appreciate you coming on our live stream and sharing your experience with everybody. And that's a wrap. So I hope everybody can get their position filled. Don't forget, this is, if I were actually trying to just buy and hold USO instead of doing this relatively big position, something like 10 to 12% in our portfolio, it'd be more like a 1 or 2% position. So the only reason we would be confident to have a 10% or a larger position is because we have a put option literally 48 cents below. So our maximum loss is already cut to essentially just $12 or 50 cents. And meanwhile, we're financing that with the call option up above. So it's a beautiful setup. Speculators are going crazy on USO right now. They're driving up the price of call options, which makes it great to just buy the stock, sell the call, and then protect the downside with the put. So I just don't think this drama is going to end anytime soon. So we could be enjoying some nice returns on this for a while. And again, the risk reward on this is we can lose up to 4% week over week and gain up to 8%. So thanks again for everybody. Look for the new live stream tomorrow where we'll be trading the SPY ahead of the important Fed meeting, where we're expecting them to come out with some dovish news that should drive the SPY higher.